Hello and welcome to today's video, which is called S&P 500. Ripping, dipping, having second thoughts on FOMC. We had been riding it both ways, meaning all the way up, and then once it retraced, then up again, and now there is time to examine the core-witching impact, what I had foreseen and what I had told clients, and what it means for you watching this video. Welcome as well to my Twitter feed, it's very rich, just as my site, so make sure to review them. Such was the situation yesterday pre-market. I will be linking to yesterday's video where I described this situation precisely, and the intraday lows were that point where all clients had been given my green light for this opportunity to be really worthwhile to get into on the long side, and whoever did so had benefited mightily. Note as well that the 5-7-60s had been proven as a resistance, which is what I had been covering live for them and on Twitter as well. So make sure to make the most of everything what I do. Thank you for liking these videos and subscribing to the channel. It helps greatly and you get timely information whenever the new post goes up if you click the bell button, notifications on. 5-7-60s had stopped the advance, prices had come back to logical support, but the point in such a technically driven market is to protect one's profits and not to overstay one's welcome. This is what I had a couple of hours ago. This video is of course being recorded around 2 hours before the opening bell Friday. What I had written in our intraday channel for equities. You know that S&P 500 is in the bottoming process. I have been very clear about clear rejection of stagflationary implications of Friday's very bad University of Michigan consumer data. Market rift, what was short squeeze, developed over into an oversold bounce at the beginning of this week, and prices have not really come back. They did not give the sign of wanting to yet again break down to the downside and challenge prior Thursdays, let alone Friday's bottom. These are clearly important signs, but we have to respect that today is core witching and the options volume to go through is rising every single quarter. So be ready for a pretty volatile session, and the point which I had made to clients and that you can see on this screenshot is that we as traders / investors always choose which opportunities we want to follow and when we want to stand aside. And right now, before the open, it's one of those days, one of those moments, one of those hours to stand aside. There is no advantage in trading every single hour. We just pick the best opportunities and jump on them like a tiger. Such is more colorful chart of today's pre-market situation. You can see clearly drawn two horizontal supports. Thus far, prices have remained with the upper one, 5.688. That's the 5.690-ish level, which I had been discussing in yesterday's video. I will be linking to it within this one. Is there a guarantee that prices do not come back to the lower one or try to undershoot it? There is none. It can easily happen. We had seen the predicted options effect, positioning, unwinding of those puts play out right off the opening bell yesterday, and that was the thing that made me say to clients that this is a good opportunity to ride on those coattails to the upside and lock in our profits whenever that trade gets maxed out. And right now, the question is whether the upper one or the lower one as supports hold. But note that prices are going just sideways. This is the sectoral view. Otherwise, pretty risk of perspective. The defensives had done relatively well. Note as well, though, how my big financials, you had heard me talking and writing as well about financials, banks, as well Hood surprised me positively with its relative strength, and that is quite a contrast. You know as well that I had talked semiconductors in a somewhat better light than tech itself or even Nvidia itself, which had been showing quite disappointing performance heading into its event and throughout its event. I had been talking that at length in prior daily videos, so make sure that you review them, and you can look forward for extensive weekend one as always. My join page will help you select what's right for you based on what and how you trade. Make sure to combine the full scope of daily analytics together with intraday channels for the greatest advantage that you can get in the markets. My professional journey, in case you don't know it, it will walk you through perfectly. Obligatory disclaimer, and let's talk soon again.